So even though you may have paid 35 years worth of national insurance contributions, which in theory should entitle you to the new full state pension, when you check your state pension forecast, you may find that the forecast is still telling you that you don't qualify for the full state pension. Now, this is because of lots of different rules that were cobbled together back in 2016 when the government announced the new state pension scheme. And in this video, I'm going to explain what's happened and why you might not qualify for the full state pension, even though you've paid 35 years worth of national insurance contributions, and also what you can do about it. I'm Carl Roberts, Chartered Financial Planner at RTS Financial Planning. Okay, the first place to start in all of this is your state pension forecast. You need to get yourself online to your own government gateway tax account, and within that there should be a state pension forecast section. It's really useful. It will tell you everything you need to know, what your record is and what you're entitled to. So at the end of the tax year 21-22, the current weekly state pension is about £179 a week. And normally you'd have had to have paid 35 years national insurance contributions to get that amount of state pension. However, back in the day, many workplace pension schemes allowed you to contract out of the state pension. And what that meant was that you and your employer ended up paying less national insurance contributions and instead got a rebate into your workplace pension to cover for the loss of state pension. So in designing a new scheme, the government obviously thought it wasn't fair to allow people that had contracted out and paid less national insurance to receive the same new state pension as those people that hadn't contracted out. So if you're one of those people that did contract out back in the day, and many people I speak to had, I think it was pretty much the norm in those days, then when it comes to your state pension age and your actual state pension payment, the Department of Work and Pensions are going to do two calculations. They're going to look at what you would have been entitled to under the old state pension scheme using 30 years national insurance contributions, and also add in any additional payments you would have made, perhaps through SERPs. And then they're going to make a second calculation and look at what you should be entitled to under the new state pension scheme using 35 years national insurance contributions with a deduction for the periods you were contracted out. And they're going to look at the two and they're going to give you whatever the highest is. Now, interestingly, it can work the other way. So you may find that if you hadn't contracted out and you'd made additional payments into the state pension, you could find you actually have a higher state pension. You're entitled to a higher state pension than the normal new state pension forecast. Now, if you're one of those people that haven't reached your state pension age yet and you're not entitled to the full state pension, so your forecast is currently showing you with less than £179 a week, then there could be an opportunity for you to top up your state pension. Now, I did a video recently on this and I'll try and link to it at the end of this video, all about how to go about topping up your state pension. The key thing to remember on that is that you need to pay voluntary national insurance contributions to top up, and you can only do it for the last 6 years. But what this could do is it could get you all the way to the full state pension. And in the last video, I'll share some of the reasons why it is a really good deal and why it might be really beneficial for you to do that. Now, for some people, the state pension isn't going to form a large part of their retirement income, but it will be a good foundation. And remember, this is secure income that will be paid for the rest of your life. Now, I hope you found this video useful. If you are coming up to retirement, we actually have a really useful download called the 10-minute retirement plan. It's available on the website, rtsfinancialplanning.co.uk. You should scroll down the homepage, you should find that. It's a free download and it will provide some really useful tips and things you need to be thinking about before you make that retirement decision. Until next time, take care.